apologize for starting late, but anyways, we are delighted to welcome all of you for our very first Development at Work Forum. This is sponsored by the AIM and the EMDM class. We have about, I think, well over 60 guests or participants in this forum. I hope that we will learn so much from this, and it will give us insights as to microfinance and linking that with ASEAN integration. The seminar is Microfinance, Facing the Challenges of the ASEAN Integration 2015. I'm sure all of you are very much familiar with this topic. It's a very hot topic now, ASEAN integration. And we want to link that with the complexity of microfinance, right? I think we have participants from different sectors. We have from government institutions such as PDIC, Insurance Commission, from the government financial institutions such as Land Bank, SEC, Bureau of Internal Revenue, BFAR, NPDC, and we also have somebody from the local government unit, coming from Lanao del Norte, and we also have students from various schools, and we have professors and students also here at AIM. Before we thank you for being with us today. Before we introduce our speaker, we just have a few announcements. Next month we will also have our second forum actually, and we are inviting everybody to come be with us on that gathering. If you want to have a copy of the presentation slides, we can email them to you, and just tick mark in the registration form and indicate yes if you want them emailed. Okay, so what we're going to do is, after the speaker is done with the presentation, we're just going to have a 5-minute break, and then we'll open the floor for questioning. Once we do that, I think we have microphones. We'll just hand over the microphones, and then, or you could just write on a piece of paper your question and hand it over to us or any of the EMDM students so we can read them for you. Lastly, we hope that you could turn off or put your mobile phones on silent mode. Okay, for the duration of the forum. Now, for our today's topic, microfinance and ASEAN integration, to help me welcome our speaker, we have one of the core faculty of AIM, Dr. Rufo Mendoza.
Thank you very much, Tanya. A pleasant afternoon to everyone. We take pleasure in welcoming you to this forum focusing on microfinance as part of the Development at Work series in the Asian Institute of Management. This afternoon's forum was initiated by a group of students who are currently enrolled in the EMDM. It's Executive Master in Development Management with specialization in public finance. Most of them are officials and employees of the Department of Finance and attached agencies. I must say that our topic this afternoon would be a good break or respite for all of us from headlines on newspapers and grand buzzwords such as PDAF and DAP. While microfinance entails a relatively smaller magnitude of financial transactions, its benefits and contributions to society, the economy and business, and countryside are equally significant and pervasive. The processes entailed in microfinance transactions are done or undertaken with the intention of affecting lives of people And like any transactions involving financial resources, the business of microfinance is subject and prone to risks. This risk could come from the internal management of lending and borrowing, or from the external environment of organizations and institutions, including the risk brought about by the forthcoming ASEAN integration. Are microfinance players and organizations prepared for 2015 ASEAN integration? That is what we will hear from our speaker, the government's representative to the ASEAN expert panel on SME financing, Deputy Executive Director of the National Credit Council, and the Director of the Fiscal Policy and Planning Office in the DOF. Our speaker was also instrumental in the formulation and development of the Philippine National Strategy and Regulatory Framework for Microinsurance. Ladies and gentlemen, let's welcome our speaker, Director Joselito S. Almario.
Pwede ko bang tanggalin yung mic? Hindi kasi ako sanay magsalita sa harapan ng rostrum eh. Nabubog ako at baka makatulog ako habang nagpe-present. Ay, ito na lang. Magandang hapon po sa inyong lahat. Okay lang mag-Tagalog ako. Yan. Sa totoo lang, parang deja vu to sa akin eh. Kasi sometime nung sinutawag doon, estudyante pa ako ng microfinance, o microcredit, tawag nila microcredit before eh. Kinubida din ako eh. I think this is the same room. Ha? Oh, yeah. Okay. Thank you for... I will speak in English. Yeah. Of course, because we have foreigners, but pardon me if my English is not that good. This is like a deja vu for me, because when I was still a student in microfinance or microcredit, as still now, it is still a continuing study. I think this is in the same room when I was invited by a consortium of NGOs, and they were presenting microcredit. And the topic, actually the challenge was what they call banking for the poor. And there was this bill, and I think also one of the people here, those who were pushing it, is with the AIN at that time. And that was still in 2000 or 1996. And it was really a heated discussion on how are we going to provide the low income or the poor access to credit. I think that was the main problem. If you will recall, the biggest problem that haunted government was how can we provide the poor access to credit? Because what they say is that there is market imperfection. The challenge was, hey government, if the private sector cannot provide the poor credit, can you provide, can the government provide them access to credit? But the question is, why is the private sector afraid to provide credit to the poor? What do you think? is the mindset of the private sector when giving credit to the poor. Yes?
Inability to pay.
Yeah.
Inability to pay.
Inability to pay. That's right. That's precisely the fear of a private financial institution. And maybe the poor cannot also go to the financial institutions precisely because, why? Why are they afraid to go to the financial institution? Cumbersome requirements. And why do the private sector require cumbersome requirements? Assurance. They want to be assured that they will be paid. And they will put in all the necessary requirements so that they will have the security and the thinking that they can sleep when they provide credit to the poor. And precisely it boils down to the thinking that the poor cannot pay. Because if you will ask me, or ask anybody, the question will always arise, how can I lend to individuals or people that doesn't have the capacity to pay? No way. And if I will be lending to them, then I will ask a lot of security. Then it goes round and around. And then, of course, those low income, those people who are in the countryside now will tell us, if the private sector will not lend, who can we turn to? That was in the 1970s. The mindset was really, the poor cannot pay. And then government will have to do something about it. What was the result? Any guess? What was the immediate action of the government? When you have a problem of what they perceive as market imperfection, how can government now help these clients to gain access to a credit? What do you think is the immediate thing that the government can do? Dole out? Give away money? Guarantee? Well, maybe guarantee, yes. Collateral free? Yeah?
Proliferation of directed credit programs.
Directed credit programs? Yes, guarantee. Directed credit programs, no collateral. But there is actually one that is really government entering the picture. Right? Because the government says, oh, these people should be helped. We have to create a window for them. And that is precisely why government created a lot of credit programs at that time. Even government agencies that are not government financial institutions were implementing credit programs. Give me an example. Masagana 99. For our friends from the abroad is that Masagana 99, that's why you call it Masagana, is that it is for the farmers, so that the farmers, you lend to the farmers so that you have 99 kabans per hectare. That's just one example. Others. Biyayang Dagat. This is a credit program for the fisherfolk. Tulong sa tao. Do we have anybody from DTI? Ah, you are from DTI? That's okay. Formerly, that's good. Tulong sa tao. That's for livelihood. Right. Other credit programs.
Small vendors.
Small vendors from what agency?
PNB.
BNB. So you see, those are just examples of government programs that really address what, again, is perceived as a market imperfection. But all of this is characterized by what? All of these credit programs, what is the main characteristics of all of this? Failure, but why?
Failure of repayment.
Why?
Because in the case of Masagana 99, the farmers thought that it was the dole out and they do not care whether they pay back or not. But even if they like to pay, they don't have the capacity to pay because the harvest is not much after all.
Even if they have the capacity to pay, they will not pay because the harvest is not enough for the repayment. Is it because of the interest rate?
In the case of Masagani 99, the interest rate is so minimal. Yeah, but still they cannot pay because of the mindset that it is a dole out.
Maybe Tony is right. Dole out. But again, the question arises, if the poor cannot pay, and here you are, the government giving out loans with minimal interest rates or no interest rates at all, why are they not paying? Is it because government doesn't know how to collect? Huh? Yes? Yes? We're not talking about government financial institutions here. That was before. You have already a credit program that is already subsidized, minimal interest rates or no interest rates at all. And what happened? Failure. Masagana 99 became Masamang 99. Biyayang Dagat became Buhayang Dagat. I don't know about TST. I have friends in BPI. But again, the question is, when they don't have any access to credit, where do they go aside from these government credit programs? To? Boom. Informal lenders. And what do we mean by informal lenders? 5-6, that's a better word maybe. Yeah. Saying 5-6, it is well known when you call it 5-6. I saw I think a episode of Real Time in GMA 7. I think it was 1 month ago. And there was this episode on Dubai. And there is that thing that really talks about the 5-6. And I think the Mumbai is really doing good in terms of providing access. We're not saying that it's bad, because they are actually doing a good service in terms of providing access. And I remember one thing that when the Mumbai went to another client, and the client said, "Can I just pay tomorrow?" And then Mumbai said, "No problem, I'll just go back and I'll collect the payment." I think that is one good. But if you are talking about 5'6", are you talking about the height? It's the repayment method. How does it work?
Borrow 5,000 and then for a month you pay 6,000. So that's around 20% per month.
It's around 20% per month, but depending on the need, right? Maybe other clients would rather have it on a daily basis, especially those on their cash flow, depending on the cash flow, like a vegetable stall owner who buys vegetables in the morning, sells it in the, early morning, sells it in the palengke, in the morning up to the afternoon, and then pays the Mumbai in the afternoon, and get another loan, right? So he gets 5 peso in the evening, to pay 5 pesos for 5 pesos alone. Then in the early morning, he goes to the farmer, use the loan, sells it in the stall, in the market, and the proceeds he will pay in the afternoon. But it will now be 6 pesos. That is 20%. Right? 5 pesos for every 6 pesos repayment for every 5 peso loan. Let us compute that. How much will it be on a weekly basis if that is the case? 140%. On a monthly basis, 140 times 4, 560. And on an annual basis, 560 is 12. You have a calculator in your phone. That's about 7,200% per annum. Now, I will ask you, if you need money today, will you get a loan at 7,000 per annum interest rate? No way. Too much. But why is the poor getting a loan at this exorbitant rate? We have been thinking that the poor cannot pay, but they have been paying a 5-6 interest rate. Did we think of that? And here comes a government credit program without interest rate or with minimal interest rate. Maybe the highest is 6% per annum. And yet they are not paying it. Now who says that the poor cannot pay? There must be something wrong, really, with that mindset. And that is why, precisely maybe, in a nutshell, nawala na yung aking... There must be something wrong in the file that I have. Can we give me some 5 minutes? I can get my file over there. Yeah. Sorry for that. Yeah. So, what are we saying then? The poor cannot pay. Government has to intervene. It has to come up with all kinds of credit programs that is subsidized. And then, what happened? Why is it that government was really trying to help, but there is actually failure? It may be because we really don't have at that time a policy on how to do it. It was just a piecemeal way of attacking the problem. And we found out that it cost a lot. Billions of pesos went down the drain. Subsidized government credit programs. We also found out that even if you subsidize it, it doesn't help. It only worsened the problem. Because the mentality of those clients were always asking for dole-outs. It is not empowerment. When the government subsidized the credit card programs, they channeled it through rural banks. It did not help the financial system, but it also affected them. Because at that time, in 1988, we were on the bridge or on the brink of having the rural banking system bankrupt. Because everybody thought that rural banks are actually lending government money. So nobody cares to pay. And all of this did not answer the lack of access. And still the outreach was very low. And you now have undisciplined followers. The question still lies, how can we have the private sector come in? Because the private sector is still afraid. Those lessons, in terms of the informal lenders, maybe can give us an answer. It was during that time, in the 1990s, early 1990s, that's my baby, I was here in this same room, when they were actually discussing the banking for the poor. And there was also this big push to have the government subsidize lending to the poor. Not because, of course, the government wanted to, but because it was a call by civil society. It was at that time that in 1993, then President Ramos ask everybody, ask the government, can you please sit down and have once and for all, have a solution to giving access to credit to the poor. It was a difficult matter. It was really time that in 1993, government or President Ramos created the National Credit Council. It was composed of government regulatory bodies, government financial institutions, and private sector, including civil society. The National Credit Council was previously under the wings of, although the Department of Finance was the chairman, the secretariat was lodged with the Land Bank of the Philippines. We have, I know that representatives here from the Land Bank. Land Bank, were you still there at the time? No. Yes. And you know about the National Credit Council? Yeah. It was at that time in the Land Bank of the Philippines. And then, in sometime in 1996, the Secretariat was transferred to the Department of Finance. Maybe that was the first time that we got involved in all of these discussions on how do we now come up with a solution to this decades-old problem of providing access. Because what have been seen is that maybe it's not the cost of credit that is really the problem. Maybe it's not really the thinking that the poor cannot pay. Maybe there might be some solution to that. Because if you can just imagine the poor segment having credit with government at subsidized interest rates, not paying. And here you have the informal lenders with high interest rates, and yet they pay. There must be something to it. What is it? Can really make it a point that the poor can be provided access. What is it that the poor would like? Because if you will look at it, it is not really the cost that matters. It is access. And if government gets the role of providing access, will the private sector do it? Or will just see the government as another competitor giving out low interest rates? Those are things that have been being looked at. And that was the time in 1997, and a lot of discussions have been made. The National Strategy and Regulatory Framework for Microfinance was formulated. If you can just imagine, just the title was very heavily debated. Why not microcredit? Why call it microfinance? Is it just credit that the poor needs? Or are there other financial services that the poor should be able to gain access? And that is not the more controversial part. Is that how do you encourage the private sector to come in. When there are at that time still about 100 credit programs of government being implemented. Pachi-pachi. Small credit programs. In 1999, there was a rationalization of all government credit programs, out of which was the result of the national strategy. Everybody was against the strategy because government agencies will lose POGI points if they don't provide credit to their constituents. It was an uphill battle. But ultimately, those rules and regulations were issued following the national strategy and regulatory framework. But we have to go back. What are the basic principles of this strategy? Greater role of the private sector. That is the basic principle that we have. Even civil society did not agree with this because they say, if you give up it to the private sector, then we will be charged high interest rates. Some government agencies also does not want it. The second, if the private sector will be now the lead in the provision of financial services, what will be the government's role? The strategy says, from now on, government will concentrate on coming up with policies to encourage the private sector to provide access to credit. The most dreadful of all, market-oriented financial and credit policies. Nobody likes it. But we stayed put and told them, if we don't do it, who will then? We don't want institutions to give welfare. If institutions, lending institutions, will be not charging interest rates based on cost recovery, then nobody will lend. You will end up in a worse situation. And this is one thing that push everybody, the private sector, to come in. Because now, they have realized that the government will now allow them to recover their costs. If you can just imagine the cost of lending when you go to the countryside. You cannot just tell them, here is the cap on interest rate. And if you give a cap of 12%, I don't think any sane institution will go to that, because you have to set up the network. You have to have the people out there who will go out to the countryside, in the nook and cranny of the countryside, and you have to pay them. And that is one thing that was able to push also the private sector to come in. High sell for government. Even the government at that time went on an agency per agency basis to explain, until such time that we were able to convince them. Because the other way around is that if they will not undertake loan, lending, and guarantee programs, they can concentrate more on capacity building of their constituents. We told them, don't worry, you still have a role to play. And that is why most of the government agencies right now would rather go into capacity building. Because these agencies also that have the credit program, I think DTI, is up to now having a problem with loans that were not paid under the TST, and it's still in their books of accounts. They still have that. They cannot take it away because they are not government financial institutions. They cannot write it off. And if they're going to write it off, they have to go to Congress. So those four basic principles became the backbone of microfinance in the Philippines. But when we talk about microfinance, okay, where are we now in microfinance? I think this is the question more on where are we now in terms of microcredit? Were we able to give really access to credit? After more than 10 years, can we show something as a result of that strategy? 1997, less than 500,000 clients. And I remember in 1997, I think, a group of NGOs doing microfinance in the Microcredit Summit that was organized by Hillary Clinton in New York. A group of NGOs went there, and they call it Microcredit Summit. And the countries that were represented were asked for pledge of how many clients will they be able to cover within 10 years. Because at the time, Hillary Clinton was really looking at a target of 100 million in 2007. Microfinance and microcredit clients. And the Philippines were asked, can you commit a number? Less than 500,000. And everybody sat there and then they talking for, I think, discussing for about 3 hours to come up with a pledge. And I just remember that in those discussions, they were even having a difficulty of pledging 1 million clients for microcredit. That was a difficult, a really difficult discussion among the NGOs. And that was before the national strategy. 500,000 less than. But look at what we have done right now. you now have 1,400 microfinance institutions all over the country. And at that time, nobody dared to look at the banks. But out of the 1,400, 200 of that are rural banks. Nobody was really thinking about it. 800 are cooperatives and 400 are NGOs. I hope my math is correct. $1,400. We cannot imagine yet at that time that even commercial banks would like to enter the picture. They entered the market and they are now buying rural banks to directly do microfinance. Previously, they lent to NGOs and cooperatives as wholesale, but now they are looking at banks, rural banks that they can buy to be their conduits for their microfinance operations. Why? Why? What is the reason behind that? There is only one reason. What is now shaping up is that the poor can pay. And if you give them access, they will actually hold on to that access, just like an informal lender. They always pay the informal lender because at any point in time, if they need credit, they can immediately get access from the informal lender. That is what is important. Easy access. And if you can just imagine, how if you are into a lending activity, would you be happy if the repayment rate is 99.6%? Will the land bank be happy? Of course! Right? The average repayment rate is 95%. And there is one MFI that we know of that is now having a repayment rate of 99.9%. And that is why maybe commercial banks wanted to enter the picture. Because it is not only helping and providing access to credit, but it is also good business. And that makes everybody happy. It is not the interest rate. It is really the access to credit. But when you talk about microfinance, of course the concentration is always on credit. But that is only one of the products of microfinance. We have done something on credit, on the credit side. Savings. The latest report of the central bank, of the Banco Central, is that of the rural banks that are lending in microfinance, the total loan exposure is about 8 billion pesos. That is the loan that were given to these small clients of 1 million. I think they have a 1 million rural banks clients. But the savings from these 1 million clients is 8.5 billion pesos. Will land bank also like that? Right. Because that is actually just lending the money from their savings. And that is actually having a big margin. You can just imagine. Not getting any extra effort to source the funds, but getting them it directly from your clients. There is already no problem when it comes to savings. Cooperatives are also doing it. Of course, NGOs are not supposed to get savings, but of course, they have also ways of doing it. And they just call it in another way. Payment transfer is what? When you talk about payment transfer, previously, when you want to pay a bill or a utility or anything, you usually go to the head office. Right? And when you go to the head office, sometimes it takes you time. But right now, you just go out of your house and you have already that facility that you can pay your bills. Is that right? You have Bayad Center, right? LCB, what? Huh? LDC o LCB? Mali yata. Huh? There's no problem with payment transfer right now. No? And I remember when we had my mother has a helper, and when she wants to pay the bill, she would ask our kasambahay mother, would ask the kasambahay, can you please pay the bill for this? Because it's already due date. And the kasambahay will be hesitant because it takes about 1 hour for you to go to the head office in order to pay the bill. Especially when it's raining, just like outside. It's really hard to pay the bill. Right? But now, my kasambahay is asking me to pay the bill even if there's no statement yet. I was asked, why do you want to pay the bill when there's no statement yet? Yeah. Well, I thought there's already bill. But if the statement goes, can I pay immediately? You know why? Because she wants to go malling. Yeah? Malling. When she pays the bill, she can go around and mall. Because the Bayad Center is within the mall. Easy access. Another one, remittance. I remember once when remittance man from our friends from abroad takes a very, very hard time to send money. Even domestically. And who remembers when the time that if you want to remit money to the provinces, what do they call, what are the things that you do when you remit? Telegraphic transfer. It's so noisy. Right? Huh? What are the others? What others? Door to door. Yeah, it's quite door to door, just like LBC. Post office. Money order. Pakisuyo. But there is actually one very popular. Bus padala. Oh. Huh? Bus padala. You go to the conductor of the bus. Oh. No, you go to the conductor of the bus and ask them, when you pass by our house, can you give the this to my relative. No? Just make sure that the bus stops there. Right. But right now, what do you do? Wait for the text. Smart padala. Just around the corner. As soon as you give the money to the smart padala, the money's there. And they get it at that very instant. No problem. Even at that time, before you have to, when you're abroad, it's very difficult because you have to get correspondent banks, ask for this, and all of these requirements. And then you find out that it will take you 1 month to receive it. But now, all of these things have been taken care of. The only thing that was not really not taken care of in 2010 is insurance. But that is part of microfinance. I saw some friends of mine in the insurance commission here, Ray Vergara, and of course, yeah. And the insurance is actually a challenge. How can you see an insurance that will suit the needs of the low-income sector? If you have done all of this, how about this? Look at this one. We were again faced with the same problem. The insurance industry said, how can we sell insurance when these people does not have disposable income? Back to the same argument. They don't have money. How can you sell it to them? Because remember, insurance is sold rather than bought. But we told them, maybe there's still a chance. And we've been looking at it. You've seen that maybe we don't have really a policy direction on where insurance is going. Very big, unclear regulations. Nobody knows what regulation or what kind of rules when you go to insurance down the market. And then, the same old story. Hesitant providers, just like banks at that time. Hesitant to touch the poor. Products. Not tailor-fitted, because you don't only sell insurance for cars. Unaffordable. Most of the products out there cannot be really bought by the low income. Besides, they were designed not for them. They were designed for the middle income and the rich. Have you read your insurance contracts? Never mind. Who has read your insurance contract? I'm sure all of us have insurance, right? Whether government or... Have you read your insurance contract? No, be honest. Huh? None of us have read the whole contract? Is it that risky? I tried. But I stuck on the first page. Because if anybody of you have read the whole contract, the second question that they'll ask, did you understand it? If we ourselves don't care about reading a contract, I'm sure that we care about reading the contract. But when you see it alone, in the first page, you will not bother really to read it. It's too complicated. Too many legal jargon. And too many lines. Sometimes I thought it was just a design. But it is actually fine prints. It's actually words that are into it. Now the question, is that kind of a contract applicable to the low income sector? No way. Cumbersome requirements. I asked the insurance providers, if you go to the low-income sector and you want them to get a life insurance contract and you will now sell it to them, do you think they will buy it when you will be asking them to first have a physical check-up from a specialist? Do you think they will do that? This is what they call, what did they call that? Pre-existing. Pre-existing illness. That's being required, right? And they will be asking a certificate from the specialist. And before you get the certificate, you have to pay for the specialist. Do you think that will apply? That can be done for the low-income sector? The low-income sector, never mind. I'll just fight for my debt. And if, let's say, assuming that he was able to buy that insurance, and then the time comes, what will happen? They will be asking for too many requirements. Aside from that, lack of awareness is also a major problem. Nobody trusts the insurance provider. There is even a misconception that pre-need companies are insurance companies. Which they are not the same. Leave it to destiny mentality. I remember saying a client saying that you're going to buy me an insurance. Why? You want me to die? Or you're going to be buying me a health insurance because you want me to be sick? I mean, because there is that concept that if you buy insurance, you are inviting for something to happen to you. And I think that is the common thinking. And then, of course, for people in the low-income sector, there is no immediate benefit. Why should I be always paying when I don't know when I will get the benefit? It's different from microcredit. Because why? Once you get credit, you have already money in your pocket. Right? But in insurance, your money in your pocket is being given to others. It's difficult. And everybody thinks that it's an additional financial problem. All of these things are challenges when you talk about insurance. And that was why, to get the picture and I think, to plug all of these things, we again decided to have an initiative on micro insurance. From 2010 up to 2014, a lot of documents were crafted. And this became our framework since 2010. We have defined microinsurance. Also, the providers made branding to entice the consumers to buy. We have also formalized the process. Microinsurance agents were created, and this is the first time that agents are being licensed not as individuals but as institutions. We have also done prototype products. Contracts were simplified. From several pages, we have now one-page contract for non-life, two-page contract for life. Because what is important for them? If I will ask you, what is important for you when you want to see the contract? Coverage? Exclusion? That may be included in the coverage, right? Benefit? Premium payments? Maturity? Yeah. But for people who wants to buy, maybe there are only 4 major things that they want to know. Whether their name is correct. Because if their name is not correct, then they will not be able to get the benefit. Again, how much is my benefit? Right? Second, how much will I pay? And the third, and the fourth one is that what event will happen so that I will be paid. Those are the only things that are important. And of course, the more immediate thing is that if that event happens, when will I get it? Nothing more. Nothing more. But of course, coverage is part of the exclusion. But in microinsurance, exclusions are no longer being considered as much as possible. That's how simple it is. We have also done performance standards and reporting standards were established. The NBA chart of accounts and trainings on microinsurance were done. And of course, alternative dispute resolution. Because we wanted disputes to be settled at the local levels rather than go to the Office of the Insurance Commission. Just to give you an idea, delivery market, the delivery channel. When you talk about traditional insurance, usually you buy it through individual licensed agents. But now, you buy it through cooperatives, NGOs, and rural banks. Do you know that previously, banks are not allowed to sell insurance within their bank premises. The good thing is that the Bangko Sentral has lifted that if a microfinance rural bank, if a rural bank is into microfinance, they can now sell micro insurance products within their bank premises. Documentary requirements, it is now simple. Otherwise, the Insurance Commission will not approve it. Because every product will have to be approved by the Insurance Commission. And they will have to see to it that these product contracts are simple. Mode of payment. Previously, you have to pay for 1 year. Right now, there are microinsurance products that will only cover you for 4 months, but you only pay 25 pesos. That's how low it is. You pay 25 pesos for a 4-month coverage, and that already includes fire, accident, flood, and I think there's one another peril. And there will no longer be a what they call an adjuster. Because if you are hit by fire, they will, whether it's a big damage or no damage, what they will do is just pay you. Because it is the trigger, not the loss, that will give you that particular policies. Few provisions so that we can also review. Claims, it must not exceed 10 days. Do you know what happened in Yolanda? In Yolanda, the institutions that immediately went to that area in Tacloban were micro-insurance institutions. And they went there 3 days after Yolanda broke out, after the disaster. And they did not care to ask their clients for documents. How can you ask for documents when everything was devastated? Right? It's really unimaginable. So what they did is that they went there, they had a master list, and they sought the clients. And they immediately pay the benefits that they are included. Is that correct, Ray? Yeah. And you can just imagine. And there was one microfinance institution that went to me and confided, told me, if it's not for microinsurance, they will not be able to lend. Why? Because the clients that were hit by Yolanda, when they were paid by microinsurance, they were able to pay the MFI, and the MFI was able to renew their loans. That's how it worked. Microfinance in the disaster areas. Where are we? You now have 35 commercial insurance providers. Just like in microcredit, we didn't realize that the commercial providers will enter the market. But they are actually now into the market. 17 are from life insurance, big and small. 18 non-life. We have now 22 mutual benefit associations licensed by the Insurance Commission. that are entirely 100% dedicated to microinsurance. And one institution alone is covering more than 4 million lives. $89 microinsurance products. One thing good about this is that we have options. The more options we have, the better for us. 124 licensed agents, 34 are rural banks. And all of these have resulted in 2013, 20 million lives being covered. That's a lot of Filipinos right now. Now, let us go back to the topic. Because you might ask me to already, thank you. Are we afraid of the ASEAN integration? May I ask, may I ask you the question, do we all know what ASEAN integration is? Before we be afraid of it, we should know what it is actually. It's nothing but lifting barriers. You may be reading about it's too technical and everything. Well, I think the more important thing when you talk about financial service is the aspect of ASEAN integration from 2015, which will start next year. And it will end in 2020. There are a lot of negotiations still being done with regards to ASEAN integration. But the end point of it all is that there will be no barriers. As in, when you talk about it, Tagalog, labo-labo na. Let me go with cross-border supply. 4 modes, just one mode. Cross-border supply. Meaning to say, financial services can jump from one country to another. No country in the ASEAN region should put barriers for these financial services to come in. So even it says that microfinance can also be one of that. So if a one financial service of microfinance from one country goes to us, we cannot say no. Consumption abroad. Can we now buy Korean barbecue? Kimchi? Right? Sake? Right? Consumption abroad. Meaning to say, if I need a financial service, I can go to another country and email them. And I can buy that financial service from them. That's how consumption abroad. Right? I can consume my needs from other countries even if that kind of service is available in my own country. The third, commercial presence. Meaning to say, Bank of Tokyo creating a branch in the Philippines. Malaysian Bank creating an office in the Philippines. Nobody can say no. there will be no barriers for financial institutions to set up offices or branches, even though there is already a proliferation of that kind of service in your respective countries. If they want to enter, they enter. You cannot protect your domestic industry. The fourth one, movement of natural persons. Meaning to say that if we have a Filipino expert in financial services in one aspect of financial, he or she can go from one country to another. So experts can go to another country. There will be a free flow of people. Now the question, are we afraid of this? For basic things. Maybe we can ask our friends from the banking sector or the financial sector. But maybe the question should be, can we really stand when in terms of microfinance? Can we be able to really confront ASEAN integration and still stand up to this? Because the question will be ultimately, do we have comparative advantage when we are talking about microfinance? Because I'm sure, if we don't have comparative advantage with ASEAN countries in microfinance, definitely we have to prepare for it. Maybe the question should be, where is the Philippines when you talk about microfinance? That will maybe give us an answer as to whether we should be afraid of ASEAN integration. Given all of these four areas to be opened up. Let us look at this. Economist Intelligence Unit, Study on Microfinance 2013. We're not talking of data from the National Credit Council, we're not talking about local data, but a study of the economists. This is the economist actually, Economic Intelligence Unit, for 2013 among 54 countries. And this is what they have been doing since 2009. For 2013, this is the latest that they have. We are fourth in overall microfinance business environment. Again, we stated this study because we feel that this is not something that is our interest, but it is actually a study among 54 countries. We are 20th in stability. I think we can be improving on this as soon as we have the ARM sorted out. 8 in supporting institutional framework. We're doing something about that because now, by 2015, we will have the credit bureau in place and we will have the movable collateral registry. Those are financial infrastructure that we need to have this. But since 2009, the Philippines is ranked as the first. Now, are we afraid? Since 2009, when they first conducted study, we have been here and never have anybody at least made at par with the Philippines in terms of the framework. Second, 2013, this is also a study conducted by the Munich Re Foundation. Munich Re, as you know, is a reinsurance company. That is a big insurance company just like Swiss Re, one of the two biggest reinsurance companies in the whole world. And they have conducted a study in support also with the German international community. Oh, don't forget about the map. And what did they say? Again, are we afraid of ASEAN integration? In terms of coverage, the Philippines ranks first among the ASEAN and Oceania region, having a coverage of 20.6% for just 4 years. If you can just imagine, can we have a big applause to the things that we have been doing in microfinance? So maybe the next question is no longer, are we afraid? But rather, can we make use of the ASEAN integration to penetrate ASEAN markets when it comes to financial inclusion products and services? That, I think, is the more challenging part that we are facing. And we have to grab that opportunity. And before I close all of this, of course, I will not answer. You have to answer that. This is our mantra. If microcredit provides what people needs today, microinsurance will provide the future requirements. Thank you very much.
Thank you, Director Almario, for that inspiring message and giving us thought-provoking ideas so we can also contribute and participate on this type of structure, and so that we can also come up with our own innovative ways, because there's just so much potential for this. Okay, I think we have an hour left for 30 minutes left. 10 minutes left for Q&A. It would be great if we can have the right mix of questions from different sectors. Okay, so who would be the first to ask? Yes?
Okay, thank you. I have 2 questions. My name is Tang. I'm a MDM student. MDM stands for Master of Development Managers. I have 2 questions. The first one, could you please go back to the slide when the Philippines is ranked among 54 countries? It was a little bit surprised to me because normally regulatory framework is very essential component to be successful in any field. However, in the Philippines, you rank the first in regulatory framework, but you rank the 20th in stability. So it's quite contrast to each other. It seems that when you have a good legal framework, it should be stable or something like that. But here it's quite opposite. And that is the first question. The second question is nowadays there's more competition among the financial field, financial sector, especially the banks are joining the microfinance. In the past, most of the work is done by NGOs, but nowadays the banks and the small credit institution also joining the field. So how do you cope with this situation? Thank you.
Yeah. Thank you for the question. If you will note, we are first in the regulatory framework, but the regulatory framework is on the aspect of the framework in doing microfinance, right? 20th instability is more on the environment rather than the regulation, right? So it would be better, because I did not make the study, to better maybe to make the reference to how they deal with it. But apparently, the regulatory framework supporting institutional framework and 20th stability really affected our overall microfinance business environment. If we were higher here and higher here, then maybe we were first. Now, this is actually, each criteria here is independent of each other, but they have an effect on the overall microfinance business environment. So it's not really because you are first in regulatory framework, then you should be also first in stability, because they have a separate criteria for doing stability. But I'm sure that this thing affected our overall business environment ranking. Now, on the second question, there is now competition among the banks with the NGOs. Our framework says that it's not only the NGOs. We actually encourage competition, because that is the only way that we can actually give our clients more options. Because the rural banks, in the case of the Philippines, the rural banks are more experts in terms of individual lending. There are others really in the low-income sector that would rather ask for loans individually. But in the case of the NGOs, most of them practice still the group lending. And there is what we call also a problem when you talk about the group lending methodology. Because sometimes when you go to the fourth level, sometimes the members of that group doesn't have the same requirements. Maybe one of them would require higher loans. So they cannot no longer be the same in that particular group. So where will they go? They will now actually seek for better, for a microfinance institution that will actually lend individually. Secondly is that the banks have the more financial capacity to lend higher than what the NGOs can give. And that is precisely when the banks came in, there was also a pressure on the NGOs to lower their interest rates. And I think that is more important for us in terms of coming up with the competition. And what is good also is that all of these clients, the microfinance clients, have options to look at that will now depend, that will actually address their particular needs. I hope that answers the question.
Thank you very much. Can I add another question? Maybe, okay, thank you very much. I'm very interested in the word micro insurance. Normally, when we think of insurance, we think of insurance in health, in other business sector, not in microfinance. But microfinance insurance seems very interesting. And can you tell me what is the distinctive benefit between the investing on microfinance insurance and investing insurance on insurance in general? What are the distinctive benefits?
From what point of view of the investor?
From the investor and from the beneficiaries also.
I don't see any difference. When you talk about an investor, of course, they would rather look at as to whether it is sustainable and profitable. I think that's the main thing. Whether you are into microcredit or into microinsurance, the first thing that you will ask, that will confront you, is always ask, will I get my money back? So it doesn't matter whether I go into microcredit and microinsurance. It just depends, what is my expertise, maybe.
Okay, thank you very much.
I'm also an MDM student. Just for who is not MDM, just my point is we are thinking about a lot of underserved.
Yeah.
About the situation, at this situation.
To ruin the competitive advantage, not comparative advantage, competitive advantage to provide more services. What are you thinking? If is there any raise found, then it is possible what you can get the comparative advantage for your ASEAN.
Yeah, precisely because we have already the systems that are already in place when it comes to doing microfinance and giving access to the low-income sector. And what we have found out, particularly in terms of the microinsurance, is that most of the ASEAN countries are still grappling with how to do with providing insurance to the low-income sector. And that is precisely why some countries already are going into the Philippines to learn how, especially that in some countries in the ASEAN region, it is still the government that has a lead role in providing insurance. And that is why I think when it comes to the ASEAN integration and the opening up the markets, this is one expertise. And this is one thing that the system, the government can already provide this. As I said, ASEAN integration can also be buying from one country, right? If a Vietnamese or let's say another ASEAN country would like to buy insurance from a commercial insurance company here in the Philippines, they cannot say no. You see? Because again, insurance is really a means of providing the correct product to what you need. Now, if in that country, a low-income individual would need this product because most of the products being sold is not available, then he can buy it from the Philippines. And that is precisely why we would also want the insurance company, the microinsurance, to maybe come up with a delivery channel wherein anybody can buy through the web.
Yes, sir.
Okay, thank you, sir. Sir, I'm Errol from PDIC. The government has always recognized the need to alleviate and empower the poor. And microfinance institutions are conduits, government conduits to poverty alleviation. And they are designed to cater the micro-entrepreneurs to finance small business ventures. Now, sir, given the positive indicators as shown in the slides. Can you say that the microfinance have attained the mission of improving the quality of life of the poor people?
We're talking about now the impact assessment. Unfortunately, I cannot comment on that because personally, I am not really keen on an impact assessment when it comes to really uplifting the lives of the poor. Because again, my own position with that is that the policy that was made is for, the objective was really to have the poor access to credit. And that was done. Whether it affected them positively or not will depend on many, many, many factors. And it will be really hard. Because what I'm saying is that you can have a microfinance client here and another microfinance client there. This microfinance client was not successful, but this microfinance client was successful. If you would look at this one, then you will say microfinance is bad. But when you look at this one, microfinance is good. Why? When you go deeper, this microfinance client was not able to be successful because there is no infrastructure. While this microfinance client was successful because there is infrastructure, then it's not microfinance. I hope that answers your question.
Hi, Sir Itoy.
Yeah.
I'm Shane from the Insurance Commission.
Yeah.
So as you discussed earlier, you conveyed that microinsurance and microfinance have this symbiotic relationship.
Microinsurance is part of microfinance.
Yes. But the Insurance Commission regulates MBAs right now, and we only look at the microinsurance side. Actually, MBAs is focused on providing microinsurance products to the poor, right? But since you have conveyed that they work together, that microfinance take care of the present while microinsurance take care of the future, wouldn't it be more beneficial, or would it be better if we have an integrated framework for both? Since right now the BSB looks at the microfinance side, while we look at the microinsurance side. So
Yeah.
would it be better if we have a framework that is more integrated?
I think it was integrated in the sense that the microinsurance framework really was also a offshoot of the National Strategy and Framework that was done in 1997. It was just a continuation, as I presented. What happened was that insurance did not really progress as much as you would like. And that is precisely we deemed it very important to make that initiative in 2010. To have that, because still there was hesitancy on the part of the industry to go down. But as I've stated, the framework was really the backbone of the framework that was done for microinsurance in 2010 was actually, if you look at the principle of microfinance in 1997, it was the same principle that was adopted. So it was really integrated, but of course, in terms of policy formulation, it is very consistent, but we will of course, we cannot say to the private sector, you do microfinance and you do microinsurance at the same time, because that will be a regulatory framework, nightmare, precisely because an expert in microcredit cannot do insurance. It's a different ballgame. No, they're not. That is precisely, they're not doing it right now. That is precisely why there was a move to have a formalization, because at that particular time before we went into a 2010 mode of clarifying all of this, there are actually microfinance institutions doing insurance, which is not licensed. And we told them that is very, very dangerous. Because microinsurance or microfinance or microcredit needs a different kind of expertise. And it is different from insurance. Because if something gets wrong with insurance, your microcredit will get affected. Or if microcredit will have something, then your insurance activity will be affected. And that's precisely why in the framework, it was very clear that if you're going to go into insurance activity, you should first get a license from the Insurance Commission. And I'm sure the Insurance Commission will not give them a license if they are also doing credit and lending functions. Because you have to separate actually those two activities.
Okay, can we accommodate 3 more questions? Yes, sir.
Correct me if I'm wrong, sir. Correct me if I'm wrong, sir, but I don't think we insure microcredit. Do we insure microcredit? Do we have that kind of product in our insurance?
You're correct. No, it's only one product. But we have already made, because previously, I think what was being looked into by most of the institutions, especially microfinance and even the rural banks, is that insurance should only, for them, what is important for them is that insurance for coverage of credit. What they call credit life insurance. Meaning to say that if their client dies or something happens to their client, the insurance will pay for the obligation. But I think that is not enough. Because who will benefit? Not the family. It will be only the financial institutions, just like you're insuring the continuity of the institution. So what we are trying to do when we were launching this microinsurance is that it should be a stand-alone. It should be a stand-alone insurance. Regardless of the credit, there must be something left for the client. And that is what we have heard also in some of the microfinance clients. And they were saying, why should I have insurance when I only get a loan? What if I don't get a loan? I don't have insurance. You see? Now, there is now a changing mindset that insurance should not be tied with a loan.
Yes, sir, but what I'm asking, sir, can credit be insured? I mean,
of course, credit.
Yeah, not the person who loans.
Yes.
Yeah.
There is also a product, but this is no longer microinsurance. There is a product wherein a credit institution can cover their credit portfolio. Right? Meaning to say, if they have a 100 million loan exposure and something happens to their clients, and that particular amount that is being given to the clients happens to have some kind of a problem in terms of repayment, there is a product that will cover you for that, for the risk. Yeah. And I think that was done sometime 2 years ago.
Okay, we apologize, but I think we can only accommodate 1 more question. Yes, from a different agency. Yes, ma'am.
The person in black.
Anyway, yeah.
I'm Techo Tumbali of Microfinance. It's a private company. I wonder what else government can do to encourage MFIs to locate in underserved, because the mandate of microfinance is to provide access to credit in underserved and unserved areas. But there are areas where credit pollution is experienced, and there are also areas where the poor need to go to the Bombay still.
Yeah.
Like especially if they are into agriculture.
Yeah.
So, in agrarian reform areas, for example, they can hardly access credit. So I don't know what government.
What the government can do in order to encourage a microfinance institution to go there in those areas. First, improve the peace and order. Second,
But for
building
example,
infrastructure.
No, like for example, in Hacienda Luisita, there is no peace and order problem.
Is that? That might be a perception, but I think there is also another perception.
No, the gulo there is only because they don't have, well, it's an entirely different, but
entirely.
they're supposed to have support services, right?
Yeah, this is a different thing, because in the microfinance institutions, of course, in the case of, let's say, assuming, for example, Hacienda Luisita, and there are probably several cases out there that is still floating. Now, in the case of the microfinance, yeah, not all. But what I'm saying is that for a microfinance institution to expose themselves when there is still cases, and there is still what you call an environment that is not yet settled, of course, they will have a second thought on entering entering that market. But apparently, what is happening right now is still that there is still some problems when you talk about agricultural lending. And I think that is not only for MFIs but even for the lending, because again the problem is climate change. It can be economies of scale and all of these things. I think that those are some problems that will have to be settled also by microfinance institutions. But I know of some microfinance institutions that really would like to lend in far-flung areas. I will just give you an example. One microfinance institution would like to set up an office in the mountain province, up in the hills, upland, because they know that the crops there are high-value crops, right? They went there and started and tried to operate for 1 month, and they went down after 1 month. And what did they say? Although they want really, the farmers cannot. Because the farmers say, we cannot get a loan from you, because even if we wanted to, it will take us 3 weeks, 3 days to bring our crops down. And by that time, it's already chop suey. And they cannot sell it. Although the farmers are actually, but there's no infrastructure to bring it down. So I think that was one of the things that we should look into. No? Even if we want to lend, but you don't have the infrastructure that will make the produce really to the market, give it to the market, you cannot do anything. And that has to be maybe one of the things. And it's good now that at least what they call the line, zip line. The zip line is now very popular, because I think the Department of Agriculture has already zip lines, no? From above, from where the agriculture produced in the upland areas, they have made zip lines leading to the road. And the caps are being placed in the zip lines going down to the road where a jeepney or a transport is ready to pick them up in order to bring them to the market. Those are things that the government should concentrate on. If we have that infrastructure, microfinance will enter the market.
I think we end with that statement. To officially close this gathering, our class president, Ms. Tony Bolivar.
I'd like to thank Director Joselito Almario for graciously accepting our invitation to speak. And linking it to ASEAN integration, actually you make me feel proud. This slide deserves to be posted in the Facebook, Instagram, Twitter, whatever social media you have. So, we'd also like to thank the attendees. Thank you very much for your active participation. Obviously, Director Almario did not only inspire it, he stimulated a lot of thought processes among all of us. We will have another event. It's a bigger event. It's a summit. We will be discussing this time not just microfinance, but we will cover the entire financial sector, banking, insurance, capital markets, and how the financial sector is preparing for the ASEAN integration. So we'd like to invite everyone and be as participative. This will be in August. Okay, and of course microfinance, we will also include that. Now, as a takeaway, as we've heard from our speaker, microfinance sector has already come a long way. From just providing subsidy, it has already empowered the poor. We've learned that the greatest motivator is actually the fact that we're providing easy access to credit to the poor. There's also engagement of the private sector. So now that NGOs, the rural banks, cannot claim monopoly over this business, because as in fact the commercial banks have found this as a profitable business proposition. And of course, finally, the government has been clarified as to what its role should be in providing the poor access to financial services. So as a final word, I'd like to latch on to the question that was posed by our speaker, not whether we are afraid of ASEAN integration, because we obviously know the answer. It's a resounding no, we are not afraid. But a question of whether we will consider ASEAN integration as a risk or as an opportunity. And since all of us here come from different disciplines, students, members of the academe, bankers, policy makers, and even regulators, I guess we can already answer with this slide alone. Thank you very much. Before we close, we'd like to present our speaker with a token. We call on our program director, Dr. Please,